Hey everyone, Chris Johnson with Money Morning, and Tesla shares are moving, even though we haven't seen the results of the shareholder vote that are going to hit the tape on Thursday. That's right, that $49.6 billion package that Elon Musk wants. Shareholders have already really cast their votes for that. We'll find out what it was on Thursday, but more importantly, Tesla stock is breaking into a pattern that tells me where the stock is going to go over the next 4 to 6 weeks. And frankly, I think it goes there regardless of whether or not he gets that $49.6 billion. Let's jump into the charts right now. I don't care if you're an investor or a trader. This matters for anybody interested in Tesla stock. Let's go. This is going to be fun. I don't care if you're an investor or a trader. And what I mean by that is an investor typically buys a stock and holds it for the next, let's say, 5 to 10 years. A trader is somebody who's going to take advantage of swings in the market. Whether it takes a stock higher or lower, that's what a trader does. So whether you're one or the other, you're going to benefit from the next 5 or 10 minutes as we talk about Tesla and where the stock is going. Now, in order to do that, I need to make sure that you understand a simple idea, and that is that stock prices don't lie. Headlines, they can stretch the truth. They can kind of cause an illusion. But when it comes to a marketplace, and that's the important word, a marketplace, prices don't lie. They can be embellished for a couple of hours. We saw that with Berkshire Hathaway a couple days ago, a false, print on the screen. But when it comes down to it, the market price is going to get back to its efficient price. So take that idea and let's expand it out to Tesla. So Tesla right now, we're seeing all kinds of headlines over the last couple of weeks. That shareholder vote, the results are coming into the market on Thursday, and it's going to be a yes or no on whether the company moves to Austin, Texas. Who cares? Or whether Elon Musk gets $49.6 billion as a payout, those stock options that he wants. Now, last year, a judge in Delaware said, nope, this isn't going to happen. And it's all because of a movement that started with a small group of shareholders. And so it does prove the point that shareholders do have voice in running the company. But in this case, it could be something devastating to Tesla. And just for full disclosure reasons, right now, I would like to be a holder of Tesla stock, not at its current price. And notice that I said I'd like to be. I've been waiting for an opportunity to buy it when it is down. Where do I want to buy it? At $100. And I'm going to show you how it gets there in just a minute. Am I an investor in it? No. Am I a trader? Yes, I am short Tesla shares right now by way of September put options. So now we got all the full disclosures out there, and I'll show you why I am right now short the stock. But let's talk for a little more about the headlines there. If you looked at what's come in over the last few weeks, you've had a number of large investors and a number of some of these institutional services that have come in and weighed in on whether or not shareholders should vote for that pay package or not. And the balance is starting to tilt towards a no. Cathie Wood came in last week and said, yes, I'm voting for this pay package. She also has a price tag on Tesla right now and is one of the larger institutional holders of the stock that's up in the thousands of dollars for a stock that's right now sitting at $170. So obviously she sees the potential there. But the potential goes away if Elon is not sitting in that seat, the CEO seat. Now, you've also seen some headlines here about some moves, and a lot of the institutional shareholder services, those type of organizations have said, no, this is kind of a pay package that is well beyond. Now, look at what he's being paid for. This package was put together in 2018, and from taking this company to nothing all the way up to a price tag of over $400, that's why those stock options are paying him out such a handsome amount. The amount's come down considerably over the last year as the stock is trading down now 60% from those highs that we saw back in 2021, 2022. But $49.6 billion still by shareholders may seem a little egregious. So what happens? And I think it's very curious to look at some of the headlines. And I wrote something a few days ago about this. Elon Musk is playing chess with NVIDIA chips. And I think that's a great way to look at what happened. Just a couple weeks ago, Elon contacted NVIDIA and some chips that had been ordered to be delivered to Tesla. He said, no, let's go ahead and ship these over to X and XAI. That's kind of giving you a little bit of an indication that, hey, he may pull a LeBron James and take his talent elsewhere. In this case, to X and XAI, taking with him those chips, those NVIDIA chips, obviously one of the hottest commodities out there when you're trying to advance anything AI, which Tesla, of course, is trying to do. So there are some rumblings out there that this could be for real. A bigger thing, though, I think, is taking the visionary out of that seat, taking Elon Musk's vision away from Tesla. A lot of people are saying this would cause the company to fail. The fact of the matter is the company was set forth way, way back in the late 1990s and the early 2000s by Elon. The company grew as a result of the EV movement. Now, the reason that the stock is down 50, 60% from its highs is not just because Elon's been paying attention to what's going on at X and XAI and all of the other SpaceX, the other ventures that are going on out there, but it's also because there's increasing competition. GM, Ford, Rivian, you name it. And obviously, we're not even going overseas to China, where we've had tariffs that have been announced that would be put on those cars coming into this country because they want to keep the market here in the United States solid. So all of that has helped. But getting to the core of it, taking the money away from that visionary is going to get him to think about moving. And right now, the stock market has been voting with their dollar over the last couple of days. Here is a chart right now of Tesla. And this is a daily chart that takes us up to right now. Today, the stock's trading down almost 3%. There are three components that you want to look at, and we are looking at it from the trader's perspective. I'll get to the investor in just a second. The person who wants to buy it at $100, you'll see that's why I'm waiting until it gets to that price before I buy it. And I'll step in and buy a little bit, maybe at 150. But here is what I'm looking at. And this is the daily price. Couple of trend lines here. That is your 200-day moving average, that blue trend line. Typically, whenever that is in a downtrending pattern, and you can see it just rolled over, it's telling you the stock's momentum is to the downside. And this little key right here, see where that green line is crossing below the blue line? This green line is Tesla's 50-day moving average. Those are two of the most important trend lines you can watch. You don't have to be a technical analyst to understand what these are telling you. This move down below that 200, a shorter moving average below a longer moving average, is what we call a death cross. So the name obviously tells you what's happening. It tells you that the momentum has gone negative and this stock is going down towards the ground here. Death cross, you can look it up there. A number of the MTA, Market Technicians Association, and any technical analysis education website will give you the easy explanation. But we saw that in February. Heading into earnings. Now, remember, last quarter's earnings were not impressive, except for, and they were reported here, the fact that Elon Musk suggested that we may see a cheaper model of the Tesla coming out sometime in 2024 or 2025, maybe-ish. I'm here to tell you that that's not going to matter a lot. A cheaper version of a Tesla is going to help, but it's going to come out into the headwind of a consumer that is now losing their appetite for spending. What you're looking at right now is the XLY. This is the consumer discretionary sector. This is also forming its own downtrend. Now, what kind of companies are in here? Well, it's not only retailers like Target, Walmart, but it's also airlines. It's also Airbnb and, of course, automobiles. Why is this forming down? And this is a group of stocks now, not just one stock. It's because you and I have cut back on how much we're spending. And if we're cutting back on how much we're spending, we can also look at, just for a little bit of a sample here, GM, one of the cheaper automobile, and they've had some positive news in the EV space popping. But when we look at Ford and what's been going on with Ford, a little lackluster here. Why is that? Car prices remain high, interest rates remain high, and in that situation, anything, as I say, that you have to sign a financing contract to buy really comes off the table. You put that purchase off, including homes. If you look at some of the companies that are real discretionary, there's Winnebago. Winnebago is clearly a discretionary company. Their earnings just told us that the next couple of quarters are expecting more headwinds. So let's bring it back to Tesla and how that matters. The consumer is pulling back on spending. At the same time, interest rates are looking as though they're going to remain high through 2024. So don't expect everybody to be marching out. Now, that one signal that I told you is starting to tell you that the market is voting is right here. And if I zoom in on this, these pink lines, and I leave them faint for a reason because we don't often see them come into play, but those are what's referred to as the Bollinger Band. Bollinger Bands are a measure of volatility of a stock. The less volatility a stock sees, the tighter these bands get. And obviously, when you see more volatility in a stock, as we did back in January of 2024, the bands get wider. Now, whenever these bands get tiny, it tells you that there's a volatility storm coming. Bollinger Bands are not directionally biased. They don't care. They're just telling you that price is going to pick up and start moving aggressively. Now, because of this declining 50-day and this declining 200-day, that suggests that the stock is actually going to move lower, not higher. So that fast and aggressive move is going to start to take the stock higher. Let's back out and look at a monthly chart very quickly of this. You can see this red line is the 20-month moving average. 20 months. That is a line of demarcation between a long-term bull and bear market trend for any stock or the S&P 500. If you want a simple rule, look up a stock and look at its 20-month moving average. If it's above it, means it's in a bull market. Below it, it's in a bear market trend. We moved into a bear market trend in January on Tesla stock. We saw that momentum with that death cross start to go lower as well. So where does that leave the stock? Well, we start to look at round numbers here. $150 is where you see the first target for Tesla. So in other words, I expect that when we get that news on Thursday, that right now looks as though it's going to come down in favor of the company not paying Elon Musk. You're going to see almost an immediate 13% decline in the stock, and we're going to come down and test that $150 level. This is also going to be the second time that we've tested it because we did it in January, February of this year. It's what we call a double bottom in the technical analysis industry. Double bottoms typically are going to try to hold, but this has some negative momentum behind it. And I always say when a double bottom doesn't hold, that means you're going to see wider spread selling. So that $150 mark becomes the first level that you watch here over the next week or so. After that, it is a pretty clear path down to the $100 price tag, which was going to kick in with some psychological support for Tesla simply because people like to buy on round numbers. As silly as that may sound, we like to buy on round numbers and sell on round numbers. In this particular case, the 200 has already given us that indication. When we saw the stock cross below $200 here in January, immediately started moving lower. And you see what happened when we moved below that $200 level back in December, January of 2023. And that stock came back down to that $100 level. So $100 price tag is not so far off. A lot of people, when I say that, say, well, we've got another 40% lower before you'd be a buyer of Tesla. Yeah, we were there just 16 to 18 months ago. So absolutely, it is well within reach. At that point, I believe you're going to see a lot of the analysts that have been pulling out of Tesla and downgrading it step in and say, okay, this is now a long-term value. Now, I warn you folks, when you hear that phrase, long-term value, I want to see one thing with Tesla that happens over the next couple of quarters, and that is that they put in what is referred to as a kitchen sink quarter. For those of you that follow fundamental analysis and follow earnings analysis, a kitchen sink quarter is simply one of those quarters that a company comes out and just airs all their dirty garbage. They say, this is everything that's wrong right now. This is how we're going to right the ship. And really, Tesla hasn't done that. We've seen a number of companies that have done that. IBM has done it over the last couple of years. General Electric did it, and they resulted in breaking into 3 separate companies that are now competitive in their own industries. So when a company has that kitchen sink quarter, think about 2009 when the banks came out and said, this is how bad it is. That's usually when the blood is running in the streets and you see everybody selling a stock. In this case, I think we'll see that selling take it down to $100 and Tesla turns into a buy at that point, a long-term buy. Now, I'm going to warn you, I don't buy much on value because I think value is something that can be a perception that needs to be backed up by the fundamentals. The kitchen sink quarter, along with a little bit of improvement, is going to get me there. But as a long-term investor, I'm going to start taking a little bit of a chance on Tesla when we hit that $125 mark or so, maybe $100. Until then, my September puts are going to give me a little bit of an opportunity to profit if the stock does see that volatility storm to the downside. Makes me think about a couple of other companies. Meta, which we saw had a huge turnaround after their kitchen sink quarter, and then Netflix in the same, let's call them Mag 7 or Mag 10 space, after Netflix had a couple of kitchen sink quarters. Watch for that with Tesla. That's your opportunity to go long-term buy. So there you have it. Something for both the long-term investor and the shorter-term trader. If you're a shorter-term trader, watch for that report or the results of that vote on Thursday to tilt the hand on a quick trip down to 150, and then a break of that 150 is going to take us down towards that $100 mark. Round number is going to kick in there, and if you're a long-term value investor, that's where you start to look at Tesla shares. Don't try to catch the falling knife before then. That's it. Hope this helps you. Leave comments below. Don't forget to like and subscribe. We love hearing your feedback, though. I'll see you next time here on Monday Morning. And as always, I wish you the best trading success. Have a great day.